Hello and welcome back. I'm Christine Corrado. With me right now is Jeff Newgard from the Bank of Idaho. Jeff, it's great to meet you. How are you?
Great. Good to meet you too.
Jeff, great to have you here. Why don't you first start off with telling me a bit about the history of the bank?
Sure. We were founded in 1985 in Idaho Falls, Idaho, and we're a state chartered bank. We're about $420 million in asset size with 124 employees. We span from Boise, Treasure Valley, over to the east in Idaho Falls, Pocatello, and up north as well. We have a consultative relationship banking style, very much a small business commercial bank.
Well, you recently reported your Q2 earnings. In your opinion, what were some of the highlights here?
Sure. So we increased loans 35%, or about $105 million in the second quarter, about 76% higher than the prior year. PPP loans were totaled $92 million of that, so a vast majority. Agricultural loans dropped slightly for that quarter, but then that decline was more offset with growth in commercial and real estate credit. Deposits also grew 33% for the quarter and were 40% higher than the same period last year. And that is also attributable to the PPP loan program. The company's period end book value also increased to $21.81 from $20.58 last quarter.
Well, the PPP program has been extended into August 8th. What does your participation look like? What are you expecting?
So phase 3 has not been very robust. Of course, the first phase was great. We did $76.8 million, or $2.9 million in fees, $19.4 million in the second phase with $839,000 in fees. The third phase, like I said, is a little more anemic at $198,000, with just about $10,000 worth in fees. And the average deal size is kind of interesting. In the first phase, the average deal was $127,000. Second phase was $56,000. And then the third phase is $23,000. So a lot smaller in those latter phases.
Well, talking about some of these new clients, are you having much success in converting some of these new clients into long-term customers?
Yes. Yeah, that was very interesting. So 46% of all of our PPP lending came from non-customers, so converts, if you will. And we've strategically identified them to deepen that relationship. So we have their deposit accounts, but we are really trying to deepen that relationship very strategically with them. We're measuring our success rate with that conversion as well.
So maybe how does this fold into your Q3 earnings? What can you tell us about what you're expecting?
Oh gosh, we're going to continue to lend, and we're keeping an eye on credit quality. So far, our customers are saying that they're in good shape. They're weathering the storm so far, but we're keeping an eye on reserves and credit quality.
And lastly, you did graduate to the OTCQX last year. So as a community bank, what kind of benefit have you seen from doing this?
I would say exposure has been great, and the connections with the OTC community has been great as well. We've really enjoyed it.
Great to hear. Well, Jeff, it was really good to meet you. Looking forward to chatting again soon. Best of luck. Thanks so much.
Well, thank you. I appreciate it. Thank you.